Welcome back. One of the month end or period end close procedures that we recommend is the reconciliation I'm showing here. And we provide an example tab or a template tab for that reconciliation in your onboarding workbook. And ultimately what it is starting with the prior period's end balance and getting to how do you get from your prior period's end balance to the current ending balance. So I have multiple tabs open here where I've run the various reports. So starting with the prior period end balance, which would be 930. So I'd run the 930 report and grab the balance here and drop that in here. The next thing was to run the 1031, which is the period that I'm focused on. So I'm focused on 10/1 through 1031. So to run the ending balance of that period, so I ran that right here, and that provided this. And you can actually kind of see the exchange rates here. I can rerun this just so you see that it's reprocessed and that's the number. So this is that end. Now, in between that, to get from here to here, you have a number of debits to digital assets, credit to digital assets, potentially your realized gains or losses. And then to ultimately get to this number, which is basically calculating based on the exchange rates at the 1031 time, there is obviously the unrealized gains and losses included in that number. So what we end up comparing is this balance number to this adjusted number, which includes debits to digital assets, credits to digital assets, the unrealized gains and losses, the impact to the assets of that, and the impacts of the unrealized. And our goal with this is that this would be would reconcile with no or very immaterial variance, basically. So I'm actually going to run the journal entry side of the report. So we've got, this is the 930 balance here. This is the 1031 balance. So I've already put in the dates here for the journal entry, rolled up journal entry report. So I'm going to run that and let that run. And I'm going to grab the debits and credits here and drop that in. So that is that there. And then let's grab the credits here. And then the last piece of this, it comes from the tax report, the realized and unrealized gains. So here, this is the tax runner. Again, the same dates, first in, first out with capitalization of fees, and I run that through. It generates, and I'm going to grab here the unrealized and the realized gains and losses. So this is where the unrealized goes, and this right here, you can already kind of see that it's going to reconcile as you look at the difference. And this is the realized. So just adjusting the formats there. Both of these are positive. Keep the text green, and you can see that the adjusted register and the balance pretty much reconcile. There can be some rounding errors, so you can see, and which is why we have the variance percentage here being calculated. So it's off by a cent, but that's pretty immaterial and within what we would expect. So that's kind of the journey. And from a Bitwave perspective, we're comfortable that the tax side and the accounting side are reconciling. And so these journal entries is what you'll see, the total debits and credits. This is what you'll see in your ERP. We're up to date with our balance, and you just are able to do that month by month by month by month, those reconciliations. So that's essentially it.